All right, guys. Good afternoon, everybody. This is another live stream session coming to you from a head office in Ilorin, Kwara State. You guys already know the name is Adetola Freeman, and this is the week 2 in our 12 weeks of mentorship with Adetola Freeman. All right. Um, I think our week 1, we spent week 1, just looking at what the strategy looks like. All right. Trying to understand what exactly it is that the strategy represents. And I think right about now, what we're doing is we're, like I discussed last week. This week we're talking about how exactly the hold on, please. This week we're talking about how the Asian range works. All right, or an in-depth understanding of what the Asian range is. All right, and how you can make the most of it as well. So in a minute, we're going to start. I'm just waiting to see a couple more people. I'm just waiting to see a couple more people join us. All right, I needed to put my phone on silent so that it wouldn't disturb us during the course of our session. All right, so here we are. So remember, like I said last week, today or this week, we're going to be looking into the Asian range. All right, and we're going to be breaking down certain things that I think are actually important for you guys to understand. All right, and then by God's grace, next week we're going to be looking into Fibonacci systems. All right, we're going to be looking into there's something I call market ratios. All right, and we're going to be doing that next week. All right, talking about market ratios using the Fibonacci. So yes, Onyedikachi Nathaniel, good afternoon. Yes, I am very well, thank you. Mr. Kudus Ajala, yes, good afternoon. It's lovely having you here too. My friend Top Styles Kampala, you're welcome, you're welcome, you're welcome. So remember, this is a series, all right? So if you missed last week, please do well to go over the link, all right? Or you can reach out to me to request the link. All of those trainings are still going to be available up until December, all right? Because I'm doing all of this as a free training pending my birthday in November. So I'm just trying to give out some free value just pending that time, all right? So my birthday is November 27th. The next week after that, December 1st, all of those video links are going to be restricted. So you would no longer be able to have access to them. So it's about 3 months of enjoyment for you guys. So please take the most advantage of that. Right. So let us begin. All right. We'll go to this is the trading view. All right. And I think we talked about the 15 minutes time frame basically, and how we have a super trend that tells us the daily time frame trend. All right. Let me confirm that that's the settings. Yes, daily time frame trend. We have 1.5 1 day. All right. And then we want to work with the Asian range. All right. The sweep of liquidity from the Asian range is what we want to work into our trade. Right. So let's start from the very beginning of this uptrend. Wow. Onyedikachi Nathaniel. It's lovely knowing that I have a birthday mate in the community. Beautiful. Happy birthday to us in advance. So this is it. First things first, remember the Asian market, all right, talking about the Tokyo session, all right, is a market where there is oftentimes there is reduced volatility in the market for several commodities. So many commodities have, very slow pace of movement. So many commodities have one issue or the other, all right? Basically, because of the fact that, the liquidity is poor, is very low, all right? So what does that tell us as traders? All right, it tells us the same thing that a ranging market depicts. You guys should remember, we used to, when you talk about trend, we talk about, uptrend, downtrend. We talk about ranging market, all right, which is a scenario where price is literally trading between a high and a low, all right? And we know that when it comes to trading a ranging market, what you mostly want to do, all right, is to patiently wait for the breakout of that range, all right, because the range is a consolidation and you want to wait for price to get out of that consolidation, all right. So typically the same thing applies when we talk about the Asian range, or okay, but to a different degree. Why? Because for the Asian range, many times when the Asian range gets invalidated or broken, all right, price will then use the breakout momentum to search for a demand or supply zone that it needs to react from, all right? So what it does is that it uses the Asian range to gather liquidity, all right, or the breakout of the Asian range rather, to gather liquidity so that it can retest a comfortable zone, all right, before it continues in its journey. So what we do with the super trend is that the super trend applied to the daily time frame gives us an overview of what the general trend direction is. Okay? So what we then look out for is that we want to see liquidity swept, all right, or an inducement taken before we enter into our trade. So let us start with the general understanding of the Asian range. Permit me to use, I want to use a plain chart here. All right. So first things first, all right, let's imagine that we're in an uptrend. All right, so let's imagine we're in an uptrend, prices going up smoothly, all right, and then this is where we stopped, all right, this is where the market stopped. And then we now observe that price begins to, price begins to make some funny kind of consolidations, all right, make some consolidations here. The expectation will be that price would try to fill up. If there was a fair value gap somewhere here, all right, let's picture that there's a fair value gap somewhere here, all right, the expectation would be that price would use this this region, all right, price would use it to gather liquidity such that here, watch this, here you see that price broke above the previous high. Somebody would have said, oh yes, this is a breakout, it's time to buy. And then what will happen? Their stop loss gets taken, all right? Or maybe someone wants to sell from this high, their stop loss also gets taken. And then from this low here, someone wants to, buy, their stop loss gets taken. So after price has taken the stop loss from the buyers and the sellers here, the buyers here, what happens next? It comes back into the most reasonable, the most logical, the most comfortable region, all right, before it continues going, all right, and then it can move faster now because of the liquidity, all the liquidity that has been swept and taken. Are you guys with me now? So the concept of the fair value gap and the Asian range is what we are combining together. Fair value gap or imbalance or inefficiency, whatever name you want to call it. Are you guys with me now? All right. So please, if you understood what I've explained this much, all right, please drop an emoji in the chat box. Let me be sure that we are going on this journey together. All right, just drop an emoji. Let me be certain that, you guys are following. All right, let's see. Oh, beautiful. Thank you for that. Thank you. So what do we want to do now? All right. There are different formations of liquidity sweep from an Asian range. All right. And that's why I am dedicating today's entire session to discussing the Asian range. All right. So that you guys can be prepared for whatever eventuality price decides to come up with. So let's start with gold. All right. Now, here we can see that gold switched over to a daily time frame here. On the daily time frame, switched over to a bullish trend on the daily time frame here. All right. And now that switch over, all right, this was the previous high that was established from that switch over. You can see that. So what exactly happened when that was the case? All right, when that came up, you see that this was an Asian range. All right. And this Asian range broke above that high. Okay. So in this break above that high, that tells us that there's one thing that price is going to be looking for next. All right. Which is that price is going to be looking for a demand or supply zone that it can conveniently react from. Are you guys with me? So how do we locate that demand or supply zone? That becomes the next question that we need to answer. So what do? You simply come over here. Let me zoom this in. All right, you come here and then you check, where do we have the nearest fair value gap? All right, this was a fair value gap. You can see that price filled it with this low. All right, so naturally and typically that tells us that there's a demand zone here. So what do? I'm not necessarily going to mark the fair value gap since that fair value gap has been filled, but you'd observe that there was a demand zone that was created here. All right, because price went from that demand zone, right, and broke above the previous high. So here we have established our demand zone, and then I think we can check for alternatives. Are there any other regions along this area? I think this is one. All right, and I think there should be another one here. All right. So what do we then do with these three zones? How do I know? Am I entering the trade from all of these zones, or what next do I need to do? The answer to that question is to go back to the daily time frame. All right, remember what we are trading is the trend, the direction on the daily time frame. All right, so what do you simply do? You guys have seen me draw pivot points a couple of times. All right, so you can use your line chart. And literally what you're trying to do is you're looking for areas where price has closed in the past. All right. Let me explain that. If I zoom in, see this. If I zoom in, you'll see that at this point, price had closed here before. This point, price had closed here before. This point, price had closed there before. This point, price has closed there before, all on the daily time frame. All right. And this was where price was at the moment we were looking for our entry. So let's go back to the 15 minutes time frame. And what do we want to do? We want to enter a trade. We want to enter a trade from a region where price has tested before. All right, based on what we saw on the daily time frame. So hold on, let me show you this. you can see that there's a line here that tells us that price had ended or closed somewhere here before. All right, so we're going to work with this demand or this demand, either of the two. All right, what do you notice that happened when price got there? Yes. So remember, we're targeting 1:3. All right. The first trade, you can see that it didn't play out, all right, as expected. And the second position from this demand zone, all right, and the pivot we saw from the daily time frame. Because literally a new Asian range does not form until a new day has begun. All right. So this other one, all right, we got to see 1:3. All right. We get to see 1:3 if you space it out well. But if your stop loss is too tight, there's still no issues. All right. And the reason why is because from this third entry, all right, even if you've had, oh yeah, this was negative, by the time price comes into this third region, all right, you would have made away with your full recovery. And you can see that there is that zone there. All right, you can see that there's this pivot line there. The pivot lines we drew from the daily time frame. And then that would have been your 1:3. All right. Now, we've cleared this as the demand zone. This has become our new overall high. All right. This point here. Remember that was how this previous high got swept. So what do we do next? We look for, after that break, all right, we want to look for Asian range that will get swept, all right, back into the demand zone from here. All right. This becomes the new demand zone. All right. Following the market structure, just follow the market structure. This broke structure, all right, we came to a demand zone that broke structure again. All right. And after I broke structure, this high was taken. All right. Although this is still looking like a microstructure, so we know that price is most likely still going to come back, you know, to take out this low. But right before that happens, you would have gotten your 1:3 again. From here. All right, 1:3. And what happens next? This becomes the new high that was taken. All right, we have a new high that has been taken. What do we do next? We look for the demand zone that high is coming back to. All right, so you can see the high was taken, was broken. All right, Asian high was taken, Asian low was taken. Okay, so what do we have? We have a demand zone here. How you guys see it? We have a demand zone here. This becomes another buy trade, all right? 1:3. And since this demand zone already played its part, it means that when next price returns to it, we are not certain that this is going to still hold. All right? So what do we have? This demand zone down here becomes what we're looking for. All right, this red candle. Now, Before we go on, let me explain the rationale behind this. It's the same thing as the SBR pattern that you guys usually see that I use once in a while. All right, it's the same rationale. We see a low taken, all right, before the major high is swept. So price sweeps liquidity from this low, breaks above the major high. What do we expect? We expect that price will come back to the demand zone that broke the major high. Is that correct? So that's exactly what we're doing here. So see, price swept this low, all right, broke above this high, returned here. Price swept this low, all right, swept this low from this Asian ring, all right, went above the high, came back for a retest. All right, although this did not really touch the demand zone. Are you guys with me? So that has invalidated this demand level here. This demand level has also been tested at this point. All right, so you see that when price got back there, there was no reaction. All right, so where is the next area that we had? Down here. All right, let me explain that to you. Down here, you see that there's a demand zone over here. Let me just mark that out. There's another one down here. So price comes into that first one, all right, this first one, which in fact you can even confirm from the 1 hour time frame to just check, all right, how well am I doing? What zone am I marking? All right, is it correct? Is it not? Okay, so we had this zone here, right from inside the fair value gap. All right, so what do you notice? Price taps into that demand zone. Where were we? Where were we? Where were we? All right, taps into that demand zone and then moves again. But now we are not reacting because price has not taken this overall high. Now you see, this overall high has not yet been taken. So what does that tell us? It tells us that any reaction we are seeing right now, all right, we cannot conclude that the trend is, there is no lower low than this low that we have marked here, these two lows we have marked here, all right? So it's either we are entering from that demand zone, all right, or we wait entirely for price to take this high completely. You see that? So if that high is not taken, you just want to wait until it is taken. Otherwise, you'll be getting caught in very terrible trades that will not make any sense at all. Do you get what I'm saying now? Because you want to see a sweep of the major structure first, all right, before you proceed. And then you realize that after the major high was taken, all right, we had other highs that were now created, and then you can work with. For me now, this would be a major entry zone, all right, for a buy. I know somebody is wondering, why am I not working with this? All right. The reason why I'm not working with this demand zone is because you can see that it was already tested. All right. This week already seems like a test of this demand zone, and we've not yet gotten 1:3 complete yet. All right. So if price comes back here, I would definitely not be taking a trade. Are you guys with me? Let me break it down again. So we have our Asian range, all right? The overall trend is bullish, all right? And we have our Asian range. Our Asian range is what is going to serve as this part of our test. The Asian range is what we are using to form this part, all right? from this low to this high. That's what we want to use our Asian range for. All right. So from our Asian range, price sweeps the low of the Asian range, takes the high of the Asian range. What do? We wait for a retest of the demand zone. Typically. All right. Are you guys with me? Please let me know if you guys are following. I'm going to show you another example from the bearish trend on gold. Now, remember what I said about the major low or high being swept before you look for trades. Here was the major low on gold. All right. But the trend shifted bearish. Are you guys follow me? The trend shifted bearish. And because this was the major low, this major low has not yet been swept. There has not been a break below this major low. Are you with me? That's why at the point where this Asian range was taken, all right, it would have been wrong to look for a sell trade. Remember, the first thing we did when we wanted to come and take a buy, when this shifted, was that we wanted to first of all see that there was a break above the previous high. Do you guys get it now? And then look at this too. When price shifted bullish, we wanted to confirm, all right, we need to see that the previous high was taken, all right? Because if the previous high was not broken, it would be wrong to start expecting, that, oh, price is going to buy. Because it's not just about the super trend changing color, it's also about price actually breaking structure on the daily time frame. So this previous high was not taken. So what do? We wait for it to be swept. All right, so price broke above the previous high. What next? We have our demand zone. This is a fair value gap. All right, we have our demand zone just around that region. All right, and then you see that when price tested it, we had 1:3 complete. All right. This was our first demand zone. Price didn't really give a clear reaction from that. Can you see? Although it almost touched it. And sometimes this is also due to the kind of broker you use. For some brokers, you will discover that price has touched it. For some other brokers, it will look like price didn't get there. All right. And then after that was done, you see that price swept above the previous high again. All right, we get a break above the previous high, telling us that, yes, there's a demand zone down here. All right, can you guys see that? And then from this demand zone, we get our 1:3 complete. And we get another break. All right. Telling us there's a demand zone here. All right. But that demand zone gets invalidated. And what do? We start to wait for price to break above this new high. And do you see price breaking above this new high? No. So at this point, we are not looking for any other buy. You guys get it, please? Remember, an uptrend is majorly higher highs, higher lows. All right? So if price is not forming higher highs, it means that what you are having is a likely shift in market structure. You guys should always remember that. Hold on. This is an uptrend. All right, higher highs, higher lows, which means that whatever you have going on here, all right, is a likely shift in market structure. Are you with me? So if it comes below this low, all right, this previous low, if it comes below this low, we say that there has been a shift in structure, and we wait for price to form a new lower high. And that will be the confirmation of our change of character. All right. Where this is our previous high that was not, that was not broken. And this is the low that has now been taken. So that's why we wait for price to create a new high. Then we start looking for sweep of Asian range again in favor of that new high that has been created. Do you guys get it? Let's look at a few other commodities. Let's do Euro USD. Are you guys with me? So this is Euro USD. All right. And I want you to follow the price action as price was coming down. You see that we had this as a previous high. We had this too as a previous high that was very pronounced. And what happened? This became our new high, all right? That price broke clearly. Are you seeing it? And after price broke that high, you can see that I have an expectation of price to return to this point, this demand zone here. All right. Why am I expecting this? Because aside that that demand zone, all right, you can see that there's also a fair value gap. So I'm waiting to see price come into this. All right. So look at it. We had another high that was broken. We had another high that was broken. All right. And now that this previous high has been broken, what do we expect? We anticipate that normally price would have reacted from this demand zone. All right. Can you see? This was the demand zone. You can see that price is currently about to break that demand zone. Why? Once price breaks that demand zone, there will be a conclusion. Hold on, let me clear this drawings so that you guys don't get confused. Once price breaks this demand zone, we will conclude then, all right, that a shift in structure is in place. All right, and at what point will we change our opinion about that shift in structure? When this high gets broken. Do you guys get it? So for me, in order for me to take a clear bullish NM position, all right, these are the two options that I have. This demand zone or this other demand zone. All right. Outside these two, there is no trade for me at this point in time. Why? Because the break of structure here, all right, the demand zone responsible for it is about to be broken. All right. Once that demand zone gets broken, it means that we will need to look for the demand zone responsible for this particular break of structure. All right. And after that, there's absolutely no other choice, no clue anymore. All right. We just have to wait for the major high to get broken again. So what do we do now? We wait. All right. We're simply waiting for price to return to this demand zone. All right. This one down here or this one down here. And you can see that I already have my trades set up around those areas. Let's look at GBP USD. All right, this is GBP USD. This was the previous major high. All right, telling us that there's a demand zone that pushed price to break above that point. Then this became the new major high that also, as you can see, has now been broken. All right, this major high has now been broken. So the demand zone responsible for that break Oh no, remember I said that Asian range, one Asian range is formed per day. All right, and it doesn't last for 9 hours. This is about, let me see. Hold on, I want to confirm for you. I know it's not up to 9 hours. Yeah, about 5 hours. 23, 15 minutes time frame bars. All right, so it's about 5 hours. So this eye gets taken, all right, telling us that there's a demand zone around here responsible for that break of structure, all right? And then the new eye that was created, you can see, gets taken again. So what do? There's a fair value gap here. There's a demand zone here. All right, we mark that as our first area of interest. Then for this one that was broken too, you can see there's a fair value gap here. So this becomes my second area of interest. Does it make sense? Let me know, guys. Does this make sense? Do you get it? So we're working with the structure, all right, and the super trend for our directions. Because if you rely on only the super trend, there are times when you will take trades that are going to be unprofitable. All right, unless probably you've done a thorough study of how Asian range behaves. All right, because of course it's very possible to also understand how the Asian range behaves, but that's an entire conversation on its own. All right, that's an entire conversation on its own. But working with the Asian range and the super trend, if you're able to find your major structures, to a large extent, you will be safer in your trade. All right, you have much safer trade. Do we get it, please? Are you guys with me? Is this clear, please? Now, like I said, next week we're going to be talking about market ratios, all right? And what I'm going to be showing you when we start to talk about market ratios is one of the confirmations that you guys can use, all right, together with your Asian range or without your Asian range to still get very clean trade, all right, almost on a daily basis. Do you guys understand now? Because the Asian range, there are days when you will not get trades on maybe your favorite pairs and all right? It's possible. But hopefully when we look at the market ratios, for those of you who love to trade gold, all right, you'll be able to see one system that can help you get trades almost on a daily basis. All right, and it's actually quite simple. All you have to do is, mark out the market ratios, follow the movement of the market on the 15 minutes or 1 hour time frames, and then once you combine it with the super trend, you get clean trade. But the issue with that strategy is that it might not work on commodities that are very sluggish, like AUD card, like all these AUD CHF, NZD pairs. Many of them will not obey market ratios for a daily trade, all right, for a daily time frame trade, or for a daily for daily entries. Let me put it like that. All right. But if that's what you're looking for, it will work amazingly well on gold. Amazingly well on gold. All right, because gold has more volatility and more momentum. So gold will definitely give you some very nice trade. All right. using the market ratio system or the market ratios technique. Are you guys there? So please, if you've not watched the last week video, all right, I'm pleading with you to please do. Okay, it's going to help you understand or shed more light on some of the things that you guys are seeing me do here today. All right, structure plus super trend gives you the general direction. All right, and then what you want to do when it comes to looking for your entries is you want to look for the sweep of the Asian range. All right, the sweep of the Asian range. This would have been a zone, all right? It would have been a demand zone considering the fair value gap, but you can see that the fair value gap already got filled and this already played its part. You can see that price already tested it. So that's why the next demand zone I'm looking out for is this one down here. Do you guys get it now? This one down here. Seeing as this was the demand zone that created the latest high, all right? The latest high was created by this demand zone, okay? So now that price has swept below it, I think that price is simply coming back to fill this fair value gap and tap into the demand zone below it. Does it make sense, guys? Please let me know. Let me know in the chat box, guys. Does this make sense? Are we clear with this? All right, let me hear from you guys. Let me hear from you guys. How is it going? How is it going? Does this make sense to you? All right, Kudus Ajala, thank you. Who else? Who else? Who else? If you're clear with this, please just let me know in the comment section or in the chat box. All right, great, Mr. Nathaniel. So now, guys, remember that this system does not necessarily work for just a few pairs. All right. So if you're looking for trades, you can just scan through, your favorite pairs, watch what exactly it is, mark out your zones. All right. You can even add alerts and then take your entries. But if that does not work for you, okay, you can just watch out for, the training next week where we talk about the market ratios. I think that will simplify this a bit more, right? Because once you have your market ratios, if you find any demand or supply zone there, all right, after Asian range has been swept, just take it, all right? Just take it, target 1:3, and then you're good. Are we clear on this, please? So before we close for today, I would like to ask, take a few questions. So if you have any questions you would like to ask, please, now would be the time. So you can just type your question in the chat box. Any questions, guys? Any questions? If you have questions, please put them down in the chat box. Upstairs Kampala says GU. Okay, this is GU right now. This is the 15 minutes time frame on GU. No, Mr. Nathaniel, you can use it on TradingView on phone. All right, this is TradingView, so anything that is working here on the PC will work on phone. All right, so this is GU. This is GU. Top styles Kampala. This chart right now is GU. So this is the major low. This is the major high that was broken. All right, so want to see if price is going to do this or this or this. Well, time range for Asian sessions differs, all right, depending on brokers. That's why I just use the Asian range indicator. All right, that's why I just used the Asian range indicator, and I mentioned the settings for it last week. Okay, any other questions? Questions. Okay, yes. But if you're going to use the Asian range on the 1 minute, 5 minutes time frames, to be honest, you're going to need to have some degree of expertise, all right, and very sharp eyes. And by very sharp eyes, I mean very, very sharp eyes. So say, for example, let me see, where's the previous Asian session? Where's the previous Asian range? All right, so say, for example, here, all right, previous high gets broken, all right. Once it gets broken, we know that the next thing is that price will seek out the demand zone that, that is right behind the fair value gap. This is the fair value gap, 1 minute time frame, all right. So you could literally position to enter from here. All right, you could literally position to enter from here. So that is one alternative. All right, then it's just a matter of following the market movement. All right, we had a break of structure here. I'm waiting for price to get to this demand zone. We had a break of structure here. I'm waiting for price to get to that demand zone. But the 1 minute time frame, trust me, is going to be a lot of work. A lot. Yeah, but it's possible. I've used it a couple of times, especially when I'm waiting for a news release. All right, especially when I'm waiting for a news release. So it works. All right, but you have to be very, very, up to date about it. That's why I'm going to be sharing with you guys the market ratios technique, so that for some of you who are able to combine the market ratios with the Asian range, you're definitely going to be able to, catch some really, really lovely opportunities. Yes, Mr. Jala, I think it's majorly present in on TradingView. Uh, Mr. Christian Azubike, am I still expecting a bounce from the order block that has been filled? All right, that's 15 minutes order block. Now, why am I saying that, we might get a bounce from that order block? It may not go far, all right, but knowing fully well that, you know, if price has broken this low, which is our former or our current major low, price has broken it, all right. If we are going to get a downtrend, we're going to need to see a lower low and then a lower high. So that's why you see that I drew that line like this, all right. Lower low, lower high, and then we can start saying, oh yeah, the structure is shifting towards the bearish direction. Do you get it now? So if price gets here and bounces, all right, it will mean that I'm expecting that price will go and create the new lower high, all right? And then after the new lower high, we can expect a new lower low, and then a new lower high, and then a new lower low. Do you get it now? So yeah, top stars Kampala, what we do now is that we're waiting to confirm our sentiment, all right? Our sentiment right now is that the structure is shifting bearish. All right. But before we confirm that the structure has completely shifted, okay, this is the major low that needs to be taken. This overall low, this swing low down here. All right, this swing low down here is what we need to see market take. All right, the current low or the previous low has been broken. All right, but the overall major low that we want to see price break is this one here. All right, such that if price breaks it, then we'll know that yes, structure has been confirmed bearish. Top stars Kampala, does that make sense? Just let me know. Top stars Kampala, let me know if that's clear enough. If you've gotten an answer to your question. All right, fantastic, fantastic. So I'm just going to stay for a few minutes so that we see what happens at that demand zone, this order block that I marked out. All right. Hopefully, in the next 5-10 minutes, it should be broken or reacted from. We just want to see what happens, in the next 3 minutes. Because in the next 3 minutes, 1 hour candle will be complete. All right. So, we want to know what is price going to do at that point. Okay, here we are. Yes, yes, Mr. Christian, yes. You're very correct. The absence of a fair value gap at this current region, all right, means that price is still going to keep searching for what it's looking for. And what is it looking for? It's looking for an imbalance that it can feel, all right? And that close imbalance, the nearest imbalance is down here. So if price doesn't find it at this order block, it's definitely going to move over to the next order block, all right, until it is satisfied with the imbalance that it gets to feel. So let's see how this candle closes, and then we'll know what next. All right, a few seconds more. Okay, I think the candle should be closing right about now. Good. So you see, it closed right within that zone. So I feel like that this demand zone, like I said, price will react, but the reaction is not expected to be a strong one. It's not expected to be in any way a solid reaction. All right, price might just want to close up, the week. All right, fill up the week to the previous candle's position, and then continue bearish, which is of course what is playing out right now. All right, you see that it's ensuring that there is no fair value gap created. It's deliberately closing up the opportunity of any fair value gap created as we're going, as price is going lower. All right, so I believe strongly that this demand zone is gone. All right, even if price reacts from it, it doesn't have the opportunity to go anywhere, anywhere reasonable. You get it now? Because this is the high that it needs to break if it's really going to keep going. And the chances or the odds of that playing out is very, very slim. But this low, the odds of price breaking this low is quite high. Quite high. Do we get it now? All right. So next week, by God's grace, we're going to be talking market ratios. All right. And trust me, you guys don't want to miss it. Next week, market ratios, we're going to talk about how to combine that with the Asian range. All right. Combine that with the super trend. Combine that with, some other amazing things over the next couple of weeks. And then finally, one of the reasons why we're having these sessions is because, some of the things that you guys are going to be seeing during this mentorship sessions, all right, is what we're putting together into a trading robot that we are currently, working on. All right, I can't make any promises. We've been trying to get the perfect robot for over about 4, 5, 6 years now. Almost 6 years, yes, almost 6 years now. All right. Do we have robots that are working? Yes. But none of them has fulfilled my own desire for a working robot yet. All right. So hopefully, in the next couple of months, we'll be giving you guys updates on how that project is going. All right. And I'm hoping that you guys can remember us in your prayers, because definitely once we have something that satisfies my own sentiments, it's definitely going to be something available for the entire community. Right. So having said that, I want to say a big thank you to everyone who has joined us on this call today. Thank you so much, guys. It's been an absolute pleasure hosting you guys. With that said, I want to say thank you for your continued support as a community. We love you guys. We're grateful to have you. So till next week when I come your way again, the name remains Adetola Freeman Ogunkole. Yes, Mr. Kudus Ajala, I dabble into MQL 4 and 5 once in a while and a bit of Python. So till when next I come your way again, thank you so much, guys. God bless you. Have a fantastic rest of the day. Peace.